Hey, what's up? Edward here. So let's talk about DraftKings, ticker symbol DKNG. For those that don't know, they are a daily fantasy app that went IPO last summer of 2020. With the NBA season in full effect and the Super Bowl coming right up, I feel like this is the perfect stock to talk about today. At the time that I'm recording, the company is trading at about a $21 billion market cap at about $55 per share. So yeah, let's just dive right into it and see what DraftKings is all about. So as usual, I'll start with the first part of my analysis, which is an overview of the company and the CEO. First, I'll get into their mission because we have to understand why the company is doing what they're doing. DraftKings' mission is to build the best, most trusted, and most customer-centric destination for skin-in-the-game fans. To develop the most innovative and entertaining real money products and offers, and to forever transform the manner in which people experience sports. DraftKings is a daily fantasy sports betting operator that provides their service through an app, where users can draft up a team on a daily basis to win cash prizes. Instead of the traditional fantasy sports where you have to draft up a team for an entire season, DraftKings hosts games and contests on a daily basis, and this is their value proposition. They list the prize pool and the buying amount for each contest and game. Users would draft out a team for any specific game and pray to the money gods that their team would score the most points in their categories. Now you might be thinking, isn't this type of business model just gambling? Well, at first I did thought so, and people can argue that, but the CEO did make a great point saying that it's more of a game of skill. If you're knowledgeable about a sport and you understand the stats behind each player, at the end of the day you're using your own sports analysis skills to beat other players. Since 2016, the majority of the states consider fantasy sports as a game of skill and not gambling. Now that we understand what they do, I want to shift focus to the CEO because the greatest asset in the company is the leadership. Jason Robins is the current CEO and founder of the company, and he currently holds about 90% of the voting power of DraftKings. So if you're buying this stock, you must believe in this guy because he has the most control. His vision is to actually make DraftKings a hub for all betting and not just sports. His goal is to actually make DraftKings the #1 betting app in the world. So fantasy sports is only the tip of the iceberg of his vision. He's been through all the ups and downs with DraftKings because they faced a lot of legal issues in the past. There was a point where DraftKings wasn't going to work out, but he stuck to the very end and he was rewarded. All in all, he does have the mentality and the vision to bring DraftKings to success. However, he's definitely not on the level where Elon Musk is, but he has a lot of potential. Now I want to talk about the investment strength. They currently have more than 1 million users and they have about 500,000 monthly active users. The total addressable market, also known as TAM for the fantasy app, is expected to be valued at about $48 billion by 2027. They do have first movers advantage in fantasy sports betting and they are positioned to dominate in this space. The company is currently growing at about a 60% run rate in users and revenue growth. With the stimulus checks being passed out and everyone being indoors, DraftKings can actually be considered a stay-at-home stock. Furthermore, DraftKings is backed by big investors such as MLB, Fox Sports, Kraft Group, New England Patriots, and the GOAT, Michael Jordan. DraftKings noticed that 80% of their customers actually consume more sports content after playing on DraftKings. So all in all, this is really great for the sports industry, which is why many teams, owners, and organizations have invested into this company. Next up, this is a software company that's vertically integrated. They don't need to rely on other suppliers or other companies to run their business. This means that they'll have really great EBITDA and profit margins. If they continue to grow their monthly active users, I do see consistent revenue in the long haul because fantasy sports is a very sticky business. Lastly, states are actually beginning to accept this business model because they realize that this is more of a game of skill instead of a game of luck. As mobile sports betting get legalized, this industry moves along right with it. Now I just want to quickly go through their competition. I will cover two of their biggest competitors. First is FanDuel, and they are also a daily fantasy sports betting operator. Their platform offers daily fantasy sport matches and online wagers for most major US sports leagues such as the NFL, NBA, NHL, PGA, and NASCAR competitions. But if you're interested in international leagues, DraftKings is the way to go. Not only that, DraftKings is the only option for fantasy esports and MMA. So in the end, DraftKings has a slightly wider international reach, offering accounts in countries such as the UK, Germany, Ireland, Austria, and Malta. So yeah, all in all, these two companies are very similar, but DraftKings does have the upper hand because they have a broader audience and more leagues to bet on. Now I want to talk about their next competitor, who is Bet365. They are a UK-based gambling company that offers varieties of gambling. They have covered just about every popular type of online betting possible. Although DraftKings and Bet365 are focused on two different gambling opportunities, Bet365 is poised to dominate DraftKings' fantasy sports niche. They have a really huge fan base of about 50 million users, and that's about 50 times DraftKings' current user base. An advantage that they have is that they are also based offshore, so they don't have to pay any taxes on their profits. One thing to point out is that it's actually not illegal to operate in countries with no betting regulations. However, the advantage that DraftKings has over these companies is that if those countries decide to put in regulations, they could close down their betting operations immediately. Now, I want to talk about their business model because we have to understand how they actually make money. So the way that DraftKings makes money is very simple. They collect an entrance fee from their players. For example, DraftKings collect 10% from users who pay for league buy-ins. So for every $10, they make $1. The remaining $9 from each user get put into a pool, which is paid out to the winner at the very end. So another way they make money is by selling ads on their site and partnering with really big companies such as NBC, Sports Illustrated, Comcast, and Sporting News. Now I want to get into the risk of DraftKings. The biggest one right now is going through legislators. They do have legal issues, especially with the debate on whether fantasy sports is actually a game of skill or a game of luck. Legislators are very slow in approving things, and this can impact their growth if they don't speed things up. It's definitely not an overnight process, and it'll take a while. More competition is coming into the space, such as MGM Resorts with their own sports betting app. I won't be surprised once casinos also decide to make their own app as well. However, for now, DraftKings is on top, but we'll see how long they last when companies start coming into the sector and stealing their market share. Now, my last point isn't really a risk, but I want to mention it here. In the past, they did try merging with FanDuel, who is one of their biggest competitors. However, the FTC did block the merger because if this actually happened, they would have had about 90% of the market share in the mobile sports fantasy space. In my opinion, I do agree with the FTC, and I'm glad that they did make this decision because competition is healthy. Now I want to talk about their valuation and their financials. Based on their growth, DraftKings monthly unique players grew by about 64% year over year to more than 1 million from July to September of 2020. Analysts are expecting about a 66% increase in revenue for their next quarterly earnings, and for 2021, they're expecting about a 53% growth. They currently have no PEG ratio because the company is currently not profitable, but we can look into the price to sales ratio. It is currently at about 66, which tells us that the stock is currently overvalued. Keep this in mind, it is all based on what the company is currently generating, so this doesn't consider any future potential growth. Now, in terms of their financials, they have a cash position of $76 million and a total debt of about $74 million. They have a current ratio of 2.9, meaning they'll have more assets than liabilities for the next 12 months. For their cash flow, they recently reported negative free cash flow. However, this was expected since they reported a loss. They are currently burning cash to grow their user base. If we look here, they have more OPEX than revenue. That means they're spending more in operations than the revenue that they're generating. This chart here shows that they're spending a lot on sales and marketing, which is more than half of their operating expenses. All in all, the capital allocations are debatable, but I can give them the benefit of the doubt because they're focusing on growing their user base. Now I want to go into the last part of the video, which is my thoughts on the stock. So first, the daily aspect of these games and contests are what makes fantasy very engaging and entertaining. One of the biggest complaints when it comes to fantasy drafting for an entire season is that players get injured and they have to carry that baggage. Another problem is that they might end up drafting a player that underperforms for the entire season. So yeah, they're solving a really niche problem, but they're doing really good at it. This is a pure software company, so in the future, I do see them bringing in more revenues than OPEX, because software companies require less capital to operate. The company is operated by a founder, so the roadmap and the vision are there. However, the valuation for this stock is very rich because a lot of future potential growth have already been priced into the stock. This company is also not profitable, so I do consider this as a speculative stock. In the end, my videos are here to help you understand the basics of the company and how they operate, because in the end we have to understand what we're investing in. So now it's up to you as the investor to decide whether this stock is worth purchasing. Remember to also do your own due diligence and research before buying any stock. That wraps up for this video. Remember to follow me on Twitter and feel free to DM me if you want to chat about stocks. Thank you for watching, and I'll see you guys next time.